Okay, so I'm calling this meeting to order. I don't know if I'm allowed to do that, but George, I turn it over to you.
So the financials for January we did, and I don't think there was anything too unusual on them. We'll start with the revenue and expenses. And it was funny, when I was putting it together, I noticed that library materials, well, first of all, the operating revenue was within about $236 of budget for the month. So very close, favorable year to date. As I looked at the operating expenses, library materials shot up, and my first reaction was, oh, okay, it usually does go up towards, later on in the year, kind of slides up towards the end. But when I looked at it, it turned out that we did spend about $15,000 for the Upper Hudson 2026 ERO contribution, which is
Electronic resources.
Yeah.
Ebooks, essentially.
So I think that's an annual thing. So that did push it up quite a bit. It would have been a couple $1,000s favorable. So I think we were still spending, even without that, more. I think it is going to slide up, but that kind of explained that. A lot of pluses and minuses, but still year to date, I think most things are within budget, except insurance that we've talked about. We were a little bit under when we budgeted that. Interest was very strong. We're about 13,000 favorable for the month. I think that's it. We're still running favorable to budget, about 23,000 for the month and about 302,000 for the year. And the balance sheet, I guess the one thing I would point out, we can look at the investment report for the investments. Prepaid expenses are higher. So prepaid consists of insurance, which gets paid for usually in June and then gets amortized down. That might be Tony coming now.
Hey,
Gets amortized down. And then we also pay health insurance usually the month before. And we put the expense in the right month, and then we basically take that amount and put it in prepaid since we paid it before the month that it was actually due. And I think the last couple of months with the changes, we haven't prepaid it. We paid it in the month. So it kind of shot up because of that. And there's one other thing in prepaid. We have, what am I say? RFP. Yeah. We had a big expense with that we are amortizing through the year. It would be the first month that we actually picked up part of that expense. And I think that was the big changes. Why don't we start with the financial thing and just any questions on any of that? So the investment report, I guess, is more interesting. We did find through a series of things that weren't ideal that we ended up with, well, we talked before that we had Zions Bancorp, and we also had that invested in the IntraFi account, but it matured on 2/13. So because it was so close, we didn't really do anything about that. But we did find out in looking at this that we have two investments with LPL in Wells Fargo Bank. And have we gotten rid of one of them, or?
One of them is, I think it's in May. We're
Yeah.
just gonna vote till May. He
Well-
said, if we're talking about the same. one.
Yeah, well, that's what he said, but I don't know if that's what we should do. So I think that when we purchased it, we didn't realize that we already held it. And when I did, and he said that, you know, it's the first time in, I don't know, 10 years that he's seen a duplicate like that. And I missed it because when we purchased it, it was the same amount and I didn't pick up that it was another one. I didn't replace the other one. And I know that the person at LPL said something like, oh, it's not a big deal. It'll mature in May. They're good banks. But I don't think that's our policy. You know, we're supposed to have all of our investments collateralized, and it's not because it exceeds the FDIC limit. So, you know, I think that it was purchased inadvertently, and I think I would recommend that we get rid of it so that we do go back into compliance. Anybody have any thoughts on that? But it seems like it, you know, I don't know. I think our investment policy says something to the effect that everything has to be collateralized by the bank.
Pulling up the policy right now.
Yeah, sorry, someone's waving at me.
No,
Yeah, sorry.
I was like, are you raising your hand?
Yeah.
Diversification, is it that section that you're looking for?
I'd look at 7, designation of depositories, the last paragraph, any depository shall fully collateralize all deposits in accordance with the provisions of the general municipal law.
Mhm.
But I mean, that's why we keep things within the $250,000 FDIC limit. And I think that, you know, I think we have to talk about when we have conflicts between NBT and LPL. This was just kind of, I don't know, it just seems more obvious, although I missed it, so how obvious could it have been? But now that we know about it, I think I would correct it.
Yeah, I mean, there's always gonna be the risk of us running into this because both of the investments are in CDs. So there's always the chance for this type of us being invested twice. Is it worth looking at changing LPL's investments to treasuries or bonds or?
So
There's no conflicts?
we've had 2 issues, Zion's, and there was one that we found in June that it was a duplicate. And I think at the time we had LPL dump that investment, so it wasn't a conflict for year end. And I think what we have to do is, my recollection is we can block investments in the IntraFi account. And I remember for some reason we blocked investments in Broadview so that the IntraFi wouldn't invest in a CD from Broadview, thinking that that would be a conflict if then Broadview did something. So I know we can block it. There's a certain amount of paperwork involved, but I guess if we're gonna continue to do this, I think that every time we buy a CD with LPL, I think we have to update the list of blocked investments. If we get rid of one, it comes off the list. You buy a new one, you put it on the list, send it to NBT right away. But I just don't know if it's a full application or what's required. But I think if we find that out, we can, you know, I was thinking we could just, well, we'll wait until something happens, but I think it would be better to be proactive. So we just avoid that risk altogether.
How often is the InterFi like changing the investments that are in it? Like, are they in and out of them all the time, or how's that?
That's a good question. I'm going to have to look at numerous reports. They could be.
I mean, is it the ones that where we're holding the individual, you know, the CDs. those are only, I mean, it's only, what, a few times a year that we're going into a new one, or is
It
it?
depends on the length. We've laddered them, so we've
Yeah.
had some that have been shorter, longer, like we just got a 10-month. So there's something changing every
3 months.
Every 3 months.
Next couple months, yeah.
That's a lot.
So-
to-
But it seems like those are, it's not like it's something that's happening all the time, so it wouldn't, so I, unless it's really burdensome to do it, it would just be every once in a while, like George was saying, every couple of months, having to update them and say, oh, we can take this one off the list, but add this one to the list. So the Interfi hopefully won't, duplicate those.
And yeah, because LPL is the one that we have more control over.
Right.
We don't have a lot of interaction with the notified investments.
Right.
When the current one we renewed, I pulled up. I had the LPL live as of the last, as of the portal bank statement. So when we looked at them, we specifically took lower interest rates because if we found one that was already there, we passed that one by.
Mhm.
But that's only as good as until Intrify makes a move.
Mhm.
And that's where our Broadview guy was saying, you're always chasing it because he wasn't aware of the paper. He said it's a product. You can't do that. That's what he is. Because I guess they handle Intrify there too. I guess we could have it Intrify with Broadview. He's like, oh, we do Intrify here too, but. So he was like, you're always chasing, you get it right now, today, but if they make a change, you're back in the same boat. So that's why he proposed, what about having treasuries, bills and things like that don't conflict.
Mhm.
I have to find the right person to ask about the paperwork, because it's
No,
not.
it's this James Sullivan.
James.
Yeah, I sent that to you. But I think that's why when you said that, I think that's why when I was thinking about it today, it was like, I mean, rather than waiting, I think if we just do it when we purchase it, then, one side of me thought like, we get marginally better interest rate basically with LPL by going longer and everything. But, when you look at Zion's was at 4.1 and we're currently getting 3.5. So, we're probably getting between 0.25% and 0.5% higher. And I think right now, at least, if we anticipate interest rates are going to go down, and I think that they probably will, that, it's probably good to kind of to hedge it a little bit. But I think if you check with him, that's the way, that's what we
Okay.
can do. And I guess, I think that the person said, I don't foresee any risk in holding the certificate until one of the Wells Fargo certificates matures, but I think it violates the guidelines that we're supposed to use for investments as well as our policies. So
I think that's right. I think we're limited,
Right.
I think it's under state law that we have to we're supposed to be only invested in things that are FDIC insured. And if we're exceeding that limit that we are. So I think we ought to try and make this change. I'm not really losing any sleep over it because the risk is like, I mean, if we have a systemic banking collapse.
that's what I was thinking.
And we have bigger
today.
problems.
We have bigger problems than that, yeah.
So I'm not, but I think we should try and correct it.
I think the biggest risk is if the office of the state comptroller comes in and breaks it up, it just looks bad, but I think the risk, the possibility of losing money, we'd have bigger problems than that.
So to make sure I've got the action items correct, it would be, we're contacting LPL and we're saying, get one of these Wells Fargo's ones.
And replace it with something.
Replace it with something else. Okay.
Yeah, hopefully that's, and then if we can find out what the process is to notify them of block CD, I think they call it block CDs.
And at that point, because we're making the changes ourselves in LPL, when we make a change in LPL, we update the Intrify and we say block these.
Yeah,
Or unblock.
Or unblock.
Otherwise.
yeah, or update the list.
Yeah, update the list.
And that was different. And Lance at the check register while I was eating. I don't know if Colleen, if you notice anything different on it, I just noticed a lot of health insurance expenses, but
Yeah. There's a expense for New Tech, which is under marketing and advertising, and that is for the GPO stress cows, and the foundation is gonna reimburse us for that. So that was one little thing.
We had the 4,000 for Cengage. Do you remember offhand?
It's materials.
Okay. Was it a database or was it? I can look it up
I
too.
don't know that
I'm curious about that one, but okay, I'll look it up. No worries.
I don't know that I knew if it was an invoice that I get from the team, they might say it's materials. I'm sure I can see if it's. The NILA was developing leaders program.
So
That was staff development. The Upper Hudson is a couple of, that's, Upper Hudson was also materials, which might seem like a weird thing, but it's more, Comics Plus is digital.
Mhm.
And then Book Page are the little paper flyers we put out with new books. Those are the ones I wrote. Tried to be a little more concise when you, I don't know, do you like this font size? As I've made the font size bigger, the problem is that even though it displays correctly, once I shrink the columns to fit, I have these unintended consequences where suddenly it doesn't, the two rows don't fit, but I don't know, I used to make it smaller and I thought it was so hard to read, so, I don't know.
it has to be at least 12.5.
This is an 11.
That was a,
Is that okay?
Snap me.
that, that was the rule at CDPHP in sending out Medicare letters,
Well,
12.5.
so one of the other things I did is, so if you look at Amazon, the first Amazon that's there, it's materials, and then I just wrote supplies. If something is a combination of many different kinds of supplies, which often happens with Amazon and Staples, I'm just going to write the word supplies. Because it could be a combination of office, program, materials, building maintenance, and circulation supplies, and I don't want to do that to your eyes. So it generally only happens in Amazon, Staples, otherwise you get a description of that it's material supplies or building supplies. So when you see supplies, it means it's a conglomeration of a bunch of different supplies. I'm looking up Cengage.
I pulled it up. I'm gonna have to ask one of the librarians what that was for.
Subscription for Gale Presents Get Set Up Edition 1. I believe it's an electronic product, but I don't know. Just because Gale's a database.
Right. So okay, before Thursday. Right. Because it comes up periodically. Gervin and Palazzo is higher than usual in the check register. It's 3 invoices. So typically Gervin and Palazzo is 1,600 per invoice. This is
We never got the December one. I had to ask for it.
right. So it's 3 invoices. It's not anything off retainer. Just we paid all.
One, there's a small non-retainer.
Okay, so
It's 2 retainers and 1 non-retainer.
Okay.
That's much smaller.
got it.
Want to move on to the budget? So. The first page, not that it matters, but this is the way we typically roll the budget up. I think for the public copy. And it's funny because when he was looking, he looked at that when we were looking at the first draft, and there were some things that looked funny on it, and we kind of adjusted it a little bit, but that's the way that will be. The second page is a summary of all of the detail line items. I think if we go back to page 3 of 6. So what I try to do is take the budget and I copied over all the way to the right. The last time we looked at it was version 4. So those are the numbers, and there's a difference in the second column from the right. Just so that, we can focus on what we changed as much as anything. So on page 4 of 6, we did take on the second line down, remove the budget for New York State disability because Colleen explained that we were not really statutorily required to have it. So we adjusted that down on that page. We made a slight adjustment to material supply, just brought it down a little bit. Is that the one that you went through and you found that there were some more items?
Yeah,
And
you've got it. I was looking at
Yeah.
the old one from, so now I see, yeah.
so we did adjust it, but we do expect it to go up and everything, the actual expense. Down on the next page, we made a couple of small changes, just kind of a flip flop to programs and program supplies. Water and sewer, I think we found that, I forgot what you said we spent, but it was down a little bit. I think it was about 5,000 or
Yeah.
something. I don't remember the exact number,
Yeah.
but then I took that down just a little bit. And on the very last page, I looked at interest again and increased it a little bit. Let's see. Where am I going here? So it was 120,000. I brought it up to 136. This year, our budget was 115. It looks like we'll be closer to 170. And I think when I did a calculation between 136 and 172, I think it's about 80%. And when I look at interest rates, that didn't seem unreasonable because we're at about 3.5 right now, and we started the year out, it had to be at least 4.5, and we expect it to go down a little bit. So I did a cash flow projection, and I reduced the interest rates every few months by 0.25% because sooner or later, I think they're going to continue to go down if the Feds drop the rate a little bit. So I think that's more realistic now. So it does leave us with the reserve on page 6 of about 200,000, which is closer to 2 years ago. Last year it was down a little bit, and I think what's contributing a lot to that is, I said Pete's payroll, but just, his, what he presented for payroll pretty much going down a little bit, even though fringe benefits are going up, so.
Can I ask, this is just about the roll up.
Yeah.
There, that I was just trying to match it up. I noticed that some of the categories are different between,
They are, and I don't know.
I see what it is. It's this other program services here, which adds up to 52,000, but it looks like 7,000 for circulation supplies is lumped in with which one is that lumped in?
Oh,
And then the 2,000 for that's under library organization was putting in the training professional development.
And I-
So I was just curious why, like, it's the same numbers, but they're just grouped differently, and I wondered if there's.
so I don't know how well you know me, and I normally am not one to say it was always done that way. But I think when I built it into here, it was literally, I looked at what we did the year before and I noticed, and I don't know, if we're trying to classify like program expenses kind of together is the only thing I can think of. And I think that, we never really look at this, but, I guess it's the message we send to the public, and it wouldn't hurt to kind of look at it and make sure that it's, that it's the best roll up for people to look at.
I mean, I think that this arguably makes sense. I just wonder if we might want to rearrange it in the system so it matches just for.
We could do that.
Because so as I see it, it's this other program services and the first two lines on that programs and program supplies. That's 23,000 and 20,000, and those add up to this 43,000 for events and classes listed on here. And then the next one, circulation supplies, is another 7,000, and that looks like it's been added in to, which line is that?
Office and collections.
Yeah, office and collection supplies, that's where that one's been added in. And then there's the last $2,000, which was added in to the training and professional development line. Now that library organizations, that's like memberships in the, it's kind of makes sense, I think, to put that with that line. So I don't have any problem with that. It was just odd. I was trying to match the numbers and it didn't line up.
Yeah.
So it took.
I saw you. It's funny, like Colleen and I have been looking at some of the roles. So the way that I presented is the way that the financial statements had it. And we made a change a couple of years ago. There was something on our financial statements that just was really miscategorized. I forgot what it was. I'd have to look back, but it had nothing to do with what we said on the financial statement. So we changed that, and I was looking, I think when I put this together, and it's like, I wonder why we present water as a separate line item. I mean, that's really a utility. And I think that's the way we roll it up for the public, which is probably for $5,000. It's worth just, rolling it up there. So that might actually be a better roll up on our financial statements.
The thought I have about the collection supplies versus the office supplies is this is one of those librarianship things where we split hairs a lot. And we're like, well, if we print a receipt to put in a book so that somebody picks up their hold, is that an office supply because it's receipt paper, or is it a material supply because it goes with the book? So I think that's why those two items get rolled up together, because like there's some things like a paperclip is clearly an office supply. A spine label is clearly a collection supply.
Material supply.
Material supply, thank you.
Yeah.
Yeah, but there's a remarkable amount of crossover there. The cleaner thing for presenting to the public would be to roll material collection supplies into library materials, because it's the cost associated with getting a book on the shelf. Like that is something that would be cleaner for presenting, like what is the actual cost of doing business. But I think for the sanity of the people who keep track of our expenditures, that's why it's rolled up that way.
Understood.
So I've had the same confusion since I arrived. I really am like, well, so I would love that whatever we did, it matched
Yeah.
both. Just because it's easier for my brain.
What numbers for the BRM thing? 21,000. Additional for this is 446. Yes. 6,000, 100. I'm fine with
Yep. Yeah, that is just the, I forget the technical term of it, but the envelope study is the 21,000.
And 16,000 is that the space? Like,
Space usage.
yeah, both of those into.
We do not. We left in George literally wrote on there. We left in the existing systems condition report, since there seems to be more consensus from the facilities committee on that one. If we want to move forward with the space study at a future date, we can always look at reallocating, but we do not leave it in.
Part of the 134 number.
Which you're saying the 16,000 line there?
Line 5090,
Yeah,
I believe that's something else. That's, Colleen, what's building equipment are now?
Repair and maintenance.
oh, okay. What's the space, thing that you?
Oh, so, BRM, our architects, gave us two quotes.
Yep.
One for the envelope study of the the building, all
Yeah,
the
yeah.
infrastructure. The other one was for how we use the space inside the building, so storage space versus office space versus public space.
Mhm.
So they're two separate studies, both of which I think are worth pursuing at some point, but obviously the systems condition report is more critical.
So what's 509 and 16,000? What's that account?
Repair and maintenance.
Building equipment for R and M. I'd also like to not use abbreviations like that. I think, so that's repair and maintenance versus cleaning and maintenance. And part of the reason why they're separated is because the New York State annual report wants it that way. So we sort of separated them out, partly because it makes sense, but they're very specific about what are your cleaning costs, what are your supply costs, and what are repairs? And they view them as different. The existing systems condition report will be rolled into one of those. It's not going to be its own line.
Right, we pulled that out just to make sure that we can draw everyone's attention to it.
6,000.
I'm just interested in this, the space utilization, what that is, but that's for another day.
Yeah, no, you should come to a facilities committee meeting and talk to us about it. Good.
Yeah.
Improvements number. 200. What's that?
Sure, so a change or how we're using it?
Oh, the change.
So George touched on this a little bit. 2 years ago, we were running closer to that 200,000. That's kind of our standard capital improvement line. Last year's budget, when we had to absorb the personnel increase and the benefit increases, that came out of capital improvements. So capital improvement dipped back down to 120. With assuming the personnel budget stays stable. So we've factored in some level of increase for contract negotiations with one of our units. And we've been running a lot of, Colleen, George and I have been running a lot of projections of what it could be. So assuming that personnel stays where it is, it's kind of taking the number that would have been personnel, putting it back where it was. And as we work on all of our facilities, that second becomes even more critical.
Yeah.
Oh, can I ask, actually, going back to that, building equipment repairs and maintenance line? Do we know what, so it looks like we haven't been budgeting for that in the past, or it hasn't been split out as a separate line in the past? Is that the story? Because I'm looking, because it looks like there's nothing budgeted for that line.
Yeah, home, D all have.
Yeah, so was that
Which line?
combined,
Which line am I on?
5090?
That's part of the issue with what's been happening is that nothing was budgeted there, but we are spending on that line. So it
Right.
should be budgeted like that.
That was that previously coming out of that cleaning and maintenance line? Like,
No,
where was that coming? Where's the, where'd that money come from?
It's been whatever, like in QuickBooks, I think that 35 is not really 35, 50, 91. It's really, that's a piece of it. And I think it's coming out of 50, 91.
Okay,
Even though we wrote 35 there, that has to cover part of the building equipments and maintenance because that code is being used now.
okay.
But I think maybe we condensed it
Well,
for the public, but it really, it needs to have its own line so we know if we have enough. money.
Yeah, well, I was just wondering, because the cleaning and maintenance, we've dropped that significantly. That was at 65 for this year. Now, I guess we're not using that much. That's
31,
weird.
60.
I'm curious why that came down so much, because that was, the years before that, it was up 69,000 was the actual 68,000. Now we're only expecting 50,000 this year.
You think some of that could have gotten classified down into repairs and maintenance or something?
I'd have to look what's happened in the past years, but as far as I know, we've had the code 5090 for a long time. And maybe it wasn't,
I'm just trying
I
to,
mean, you can see
Yeah.
that there was no budget. So if I'm understanding correctly, in 2024, that line had no budget. We only spent $70. Then the next year we spent 11,000, but it had no budget. Partly because I think we stuck it all in cleaning and maintenance, and maybe it was not knowing there were two different lines. But we do need a line for repairs and a line for cleaning. So that is,
right.
And based on how overspent we were in on line 6,000 in 23, 24, and then again in 24, 25. Yeah, I'm thinking it's just based on how we were breaking out the budget lines
Yeah,
versus what we were applying things to.
because in 24, 25, we spent a total of 111. Next year, it looks like it's 107. So I mean, it's in all just sort of in different categories.
Yeah. But, well, you're right. I mean, if we look at the 23, 24 year and the 24, 25 year, we're way over budget in both those years.
Yeah,
92 to 52 and 111 to 85. So those are really big. This year, really closer. But, I was just looking at, it's a big jump. It's a jump of 34,000 altogether. Now I know 21,000 of that is the report. So it's really only, 13,000 increase. When you take that report out of things, I was just wondering where that 13,000 kind of, I don't know, just understanding the three categories there with it. But
I guess if you back up the 21, it leaves about 113.
yeah,
and it looks
Like
like
this,
and we're
just slightly.
right.
total.
If we're going to be 107 is our projected for this year, and then 113 is just like a small increase from
Yeah.
our actual.
then we were 111 back in 24/5.
Yeah, so
The way it's spread out now works because there's question is, do we have the money budget for the repair? Now we have 16,000
right.
in that line.
And I think part of it from like an operations standpoint is when you look at 23, 24, when we were our budget was a lot lower than what our actual needs ended up being. I think that was as our new facilities manager was coming online, that was as I was getting here, and that's kind of as we were learning to live with the building post renovation.
Yeah.
So I think we were still wrapping our hands around how much maintenance does this new building actually need and
Okay.
looking up for deferrals. So, 23, 24 was kind of an adjustment, 24, 25 we're closer. 25, 26 we're closer, like I think we're getting a handle on what's the actual cost to maintain the building.
Is it possible to, was considering putting that report as like a professional fee as for maintenance repairs?
It's, yeah,
This is it.
and move it up there for the budget.
Yeah, just from the budget, because it
Yeah.
just makes it feel like, we got this big building that we renovated and now we're just, spiking. It's costing us a lot more, or all of a sudden it's just spiking, it's costing us to maintain it.
Mhm.
I don't think that's really the cost of the. It's not expensive. See, so,
Yes,
Can we put it in consulting fees?
I'm sorry.
So we could
Yeah,
put it in
yeah.
consulting fees?
I mean, we talk about that, and it's like normally their fees would probably get capitalized with a project or something. So I was uncertain where to put it, but I think you're right, that would be a better spot for it.
that, there's just, this sheet here, it always comes down to the line for reserve, but with some here, there's no line for reserve. So there's,
The capital improvements line is
Yeah, we have always followed it.
that's the balance term.
and the 2.8 is the allowed cap increase, or is that, what is that?
I think I'm sorry.
Tax levy number then?
Yeah, that is the, when I get calculations on the comptroller's website, that's what came.
So that's the upper limit of it.
Right.
Yeah.
So total expenses is more than the levy that we have. 100,000, but the investment income is in effect. The fees, grants and donations plus the investment income that makes us whole.
Like, yeah.
Yeah, so we're right at the edge.
Yes.
I guess we've always presented a zero budget. So after the tax levy and the interest income and the other income, the difference does go into the capital improvements.
Yeah.
I think one year somehow we ended up maybe with a $60,000 budget because we inadvertently didn't include something, and I can't remember what it was, but it was something different. Oh, yeah, it was 23, 24. Some reason when we published the budget, we didn't take into account the interest and investment income.
Okay. Just out of curiosity, this fees, gifts, grants and donations line. How solid do we think that number is?
Yeah, 35.
Yeah.
450. I mean, when we talk about these things, those are always that's one that's not really under our control.
Yeah,
You know, the grants, we do a limited amount of seeking grant funding for things, particularly like summer reading. So grant, I feel pretty stable about. Fees, gifts and donations, it's just,
yeah, you know, as I look at the other years, all other revenue lines here, you know, it looks, you know, it's 36 in the 23-24 year, and then it jumps up to 63, and then back down this year to something more like 47, but you know, I'm wondering, just, I don't know if we, is that, do we know like where that, all that variance is coming from? Is it gifts? Is it, you know, or what are, you know?
yeah, I mean, the big change that we've had the past couple of years is, and correct me if I'm wrong, Colleen and George, the book sale revenue goes into that line, right?
Yeah,
So we had a big jump there in that we had our annual book sale, but then we've also been doing pretty well with the standing book sale. It's, you know, I think lowering it back down to 35,000 in the draft budget is realistic, you know, because we don't want to count on it, so we
Right.
want to kind of sell it. Some of the other things, like if we started asking for more foundation funding,
Okay,
if we're more proactive in seeking out additional gifts of some sort. But yeah, otherwise, I kind of treat it myself as not necessarily found money, but
right,
That's
right. No,
highly unpredictable.
sure, yeah,
I think that when I looked at miscellaneous income of 10,591, there was one big source, maybe about 5,000 or something. I wasn't sure if it was, you know, like an unusual item. So I sort of backed that one down a little bit, as well as the book sale and the passport fees went away, although they weren't, well, they weren't huge this year because it ended pretty quickly.
Yeah, early on.
Yeah. But the past, they're gonna pay a bit.
Edwards, I think more cost of taxes.
I'm sorry,
Edwards. It's a 23-24 board.
is that the summary? Did I make that?
It's just.
Oh, yeah.
It could be 20, 23, 24, 24, 25, 26.
on page 2 of 6.
Yeah,
Just on page 2, yeah.
What else? So I'm gonna move up the 21,000 into professional fees. Also known on the summary as professional fees and auditing. Don't come auditing as professional fees. Or maybe that was for emphasis or something. We'll move that up. The other thing, I'll get rid of the 3 columns on the right. That was more for us to compare the last draft to this. For the board, it won't matter at all for their presentation. And then fix the headings on page 2. I must not have updated
Could
that.
you move like what we were just talking about under supplies? Could you take the circulation supplies from other program services, which really they're not program services, and put it with supplies, and then it would match the 52 that was on there? I think that was what you were.
I would rather wait until we were done because the chances of me screwing it up are likely. And I think we want to present it Thursday. So I guess I'd like to get you a draft tonight. But
But after,
we should do
you're
that,
not
yeah.
using it for you, but like grid, we just like,
For some reason, whenever I move things, you have to be very careful.
Do we need to vote on this as a committee or is it just?
So we're gonna be discussing it at the meeting, but we're not gonna be bringing it to a motion, right?
Right. It's
I
not.
don't think that
Right.
the plan makes a difference on what we do now, but
Yeah, in theory, at the next finance committee meeting, the committee could vote to move the proposed budget, and then that would count as a motion.
Yeah.
Board meeting, but yeah, we don't need to do it this.
I actually have to run.
I have to do this all over again at a board meeting that's starting right now with Delmar, so. I've never done back-to-back financial presentations.
Interesting, all the.
Yep, got it.
All right.
6:30.